If this whole pump is a big fake out, it's going to happen in one of two specific ways. One of those ways has to do with the monthly closure. That happens in 3 days. I didn't mean to make that rhyme, it just did. Also in this video, I'm going to show you the exact key levels of resistance that Bitcoin will be flirting around with in 2 different types of structural analysis. Tilted ranges and non-tilted ranges, mostly with horizontals. And this is going to help you judge how high your altcoins will go. Are you ready? Let's get after it. I am on the tilted range, and what we'll do first is figure out if there's a fake out, what is the way that it'll look like if it's a sooner fake out. So you have the soon fake out and you have a fake out after a continuation pump in April. Therefore, the downside begins sometime after April 1st, well after April 1st. Fake out option that happens more immediately would have to have monthly, the month of March, which closes in 3 days, close above this white line, off of which price just based before this pump, before coming into the point of control within the macro tilted range that I've covered extensively on my channel. I posted on Twitter. Also, make sure you're following me on Twitter. I've been posting about this for quite a while. And I've created a vertical line here to show you. So see this line? That is the last day of March. It's the last full day. However, if the fake out, the sooner option is the one that happens, Bitcoin's going to have to start coming down on that day or before. That's why I have that marked out there. And if there is some signs of weakness in red candles around that day or even the day before, but candles leading up to it, even if let's say I'm even on the 1 hour chart, I can still see that this line is the last day of March, right? If I start seeing bearish divergences on smaller time frames and it starts wanting to come down here, I will then start eagle-eyeing where is the exact close. These are closing at 7 p.m. New York time right now instead of 8. It's usually 8 o'clock. Take this moment to give me a quick thumbs up, subscribe if you're new, check out the Discord community within the description section, follow me on Twitter at cosasverdes with the number 2 afterward, and if online community is not your thing, but you want exclusive content above and beyond what I offer on YouTube, click the join button right below this video. Another video will pop up describing your options to you. It might be back to 8, and then I'll also have to go to the CME chart to see where it closed. It would be very difficult to do an analysis if one closed above, one closed below. That would be pretty tricky. However, I'm betting that both will either close above or both will close below, so you don't have some type of disagreement between CMEs and spot price. For newer folks, sometimes CMEs are where the big boys play, essentially larger futures of Bitcoin, and that usually holds a little bit more weight. Sometimes there is disagreement, and it leads to analyzing the charts being a little bit more difficult. So for example, an area of agreement that they just had, a huge area of agreement, which is a weekly closure. Let's go to the week here, which this is a case for Bitcoin to have, more legs up here, is a weekly closure. Let me take off the monthly 10. You had a weekly closure above the weekly 21 EMA, which is a big deal. This is a big line. And we also put on the weekly 10 EMA. The weekly 10 EMA, though, is still below. Let me take off price. That's typically pretty bad still. And you can have price come right back down because just remember, this is still cross bad. That cross back here, red going below yellow, it's like the mega death cross. And I even think I made a video with a thumbnail that said mega death cross, something like that. I might have done it for Ethereum as well, 2 videos on that and the implications of it. And historically, if they get the full on cross with a weekly candle closure above both of them as they cross, then that means, you're on your next strong leg up. And I want you all to remember that that has not happened. All right. However, in the immediate term for the rest of this week, for example, this would be a case that if there is a fake out happening, there's a strong case to say it's not going to happen before April 1st, just because of that. And it also closed above on the CME chart. We'll go put price back on, go back to CMEs. You also had on the CME chart, it squeaked out a closure above the yellow line, which is the weekly 21 EMA, which means it makes it slightly more unlikely that if this is a fake out type of rally, that it starts coming down in March. All right. So that is definitely a case for further continuation to the upside. However, the one biggest thing to realize, the most important thing in here, if you want to know where your eyes on the ball should be, what the ball should be looking at is the monthly closure above that white line or that monthly 10 EMA. You're coming up near the end of the month because like I rhymed in the beginning of my video on accident. It is a big deal. It is a big deal. Now, do you need to eagle eye this down here if price just keeps charging up or consolidating sideways through, the last day of March? No, you don't need to look at this anymore because you're probably going to continue, you're likely going to get continuation of some sort. So that is one case. The second case is this. If there's going to be a fake out, it'll have to do with the points of resistance. So I'm essentially going to mix the ideas within my analysis. I wanted to cover in this video, hey, there could be a fake out, right, of some sort. This could be a major bull trap and mixed in, and it could happen in 2 ways, either before the monthly closure or after the monthly closure starting April 1st, right? So I've covered that. And now for the case of it happens after April 1st, which seems more statistically probable right now. I will definitely give the charts that. The charts don't look like they want to turn around, but they could. I want you to keep an eye on that. Eye on the ball. These zones that I'm getting ready to give you, the key levels, the second thing is going to coincide with the second type of potential. This is one big major bull trap, and that's just another macro lower high than the 69K high. Let's go take a look at what these levels are. I'm going to do 2 different types of structural analysis here. horizontal macro range first. You're gonna look here. The next, I'm gonna put on the 4-hour chart, and you can see this. I've done this on my channel lots of times. It goes back over a full year. Back here is over a year ago. All this is when Elon Musk was tweeting about Bitcoin before he realized, oh, it's bad for, you know, the environment. I think he switched his mind on that finally. But anyway, so it goes back a long time. This line right here is the next area of resistance. So you have the point of control, which is this blue line, the 3/4 line, 1/4 line, and then so this is more like your 5/8 line, and it does get some areas pretty well. I mean, look, you get areas of support, areas of resistance, resistance, support and resistance, and we're coming up on that. So on a horizontal macro range, the next obstacle really that this has on this one type of structural analysis is 48,000, roughly 48,900 would be the analysis using horizontals and non-tilted ranges. That's the next leg up. And the next leg after that, okay, so let's put that there. The next one is 53.5 to 57K. That would be, and really, a lot of times price likes to hit these deeper colors instead of like a 5/8 line. So this is the 3/4 line. It could be attracted all the way up there. So you need to keep this in mind. This pump could easily go to, it could go to 57K easily. So this is around 57K, you know, let's say 55 to 57K right here. Horizontal analysis could have a pullback here at 48.9, or, you know, just before pullback and then hit this, something to that effect. However, in this horizontal analysis, if there's going to be a later bull trap type of deal, so what happens is the price starts going down after April 1st, it would likely, on this horizontal analysis, it's either going to happen around 48.9, which because of the weekly closure is a little bit more improbable. Therefore, it's more probable that it could leg up to 55 to 57 in April before then heading back down. And a lot of YouTubers, you know, crypto YouTubers right now are also showing that if you draw a bearish fib retracement from the 69K top, that is the exact area of a bull trap, lower high type of area as well. If you're a fib person, I typically don't use fibs very often. However, that my zone here that I'm showing you, 55 to 57, comes exactly in that area for a totally different type of analysis. Therefore, you know, with the weekly closure above the 21, I would say that Bitcoin has a dang good shot. I don't know if it's probable, like over 50% at this time, but man, it has a darn good shot of getting this 55 to 57K area. Now, let's look at the differences and similarities of if we use tilted ranges here, which I think are working a little bit better right now. So let's go take a look at that. There are going to be some differences, some similarities. Let's see how they overlap and don't overlap. Here we go. I'm going to take this sucker off. I'm going to throw back my tilted range here, and it is the top of the range, the bottom of the range, quarter line, halfway line with the point of control, 3/4 line. Bitcoin right now is having, well, it's actually using as support. So let's dive way into this right here on the 5-minute chart, and let's see how Bitcoin is behaving with it. Has it used it as full on support yet? It hasn't technically used it as support yet. Does it have to? No, but it's going to make things more probable if that you get continuation if this is certified used as support even on a 5-minute time frame. You can see here it came above it, went below it, but this area, let me zoom in there, watch. It did not use that yellow line of support. It actually did here for one candle, but that's not enough for me. The next one did not use it as support, went through, used it as resistance, came up a wick low, so you have one wick and one candle body on a 5-minute. That's not enough for me. Therefore, I really think that this in this very short-term time frame needs to chill out, you know, get your 1 to 2 hour time frame and all the other lower time frames, get their indicators to reset, and so they can charge back up. I really think there needs to be some balance on the line of 47,570, roughly 47,570. You want to draw that line on your chart, and again, it's not horizontal, but if you make it horizontal and you're only looking at it for 3 days, it's going to be almost identical. It'll only start making a difference in whether it's horizontal or tilted like mine over, you know, the span of 2 weeks or something to that effect. So that line, I would really strongly suggest that you draw in here, because if you see Bitcoin price 5-minute candles just, you know, bounce or going below, then come above, then use it as support. Doesn't matter how it does it. It can come below first, then come above, then use it as support, come up, use it as support again, blah, blah, blah. That's going to greatly increase the chance of a pump, just like, this is really important, watch this, just like how Bitcoin price did on the monthly 10 EMA. See this white line? Came above it, finally just use it as support, over and over, support, and a little bit of resistance too, but it established I respected you. And so this line right here is when I, in my community, we started, I said, hey, it's time to start going long right now. It's getting ready to pop up. And it did one pop up, and then it came back down almost to the same level, and then the move happened. So I was how many hours early on my guess? I really thought the large move was going to happen right there. I was 21 hours off. But that's when in my community I gave alerts on the Discord community. Again, there are links to that within the description section of all of my videos. That's where I started giving alerts for different long signals. All right. And then it happened about 21 hours later. And again, so right now I'm looking for 47,500. Now, the tilted range resistance areas are different than the horizontals. Zooming out here, again, this goes back more than a year. Okay, so this is when Elon was tweeting about it and all that stuff, right? Over 12 months ago. I think it's more like 16 months ago at this point. you have a halfway line here that has a lot of resistance points. This is the Christmas bull trap right here. Okay, you have this resistance back in September on a first lower high. You have on its third highest high, very strong resistance at this, I don't know, call this another 5/8 line really. And so the 5/8 line here is coming in at 52K, almost exactly. If Bitcoin goes past that, the next area of resistance is somewhere closer to 57 and a little higher, 57 to 59. So you can see on my last chart, I wrote in 55 to 57, right, on my horizontal chart, 55 to 57. This is saying 52 or 57 to 59. It's saying an or statement. On my horizontal one, it was giving more of a pretty clear range, right? With the idea that that 5/8 line is really improbable to be resistance because of the weekly closure, because of the momentum. I'm not even counting that at this point. I would be very surprised if that's, what was it, 48,900? I'd be very surprised if that ended up being resistance. However, this 52K level here, let me make this line a little bit bolder or different color, something like this. So you can see, and that didn't help out. There you go. That line right there, that's coming at 52. So my tilted range, if this is a bull trap, it's the tilted range is indicating either the bull trap has to top somewhere near 52 or in the 57, 59. And you can see how 57 does overlap with the horizontal analysis. So there is an area, and that's the level that aligns with the bearish fib retracement from the 69K top down to our recent lows. All right, lows down to about 33K, 32.9, right? So there's a lot of stuff pointing to 57K. And if that were to happen, that would pull up the midterm time frame indicators that are making me, and I still remain, midterm time frame bearish. And let me take off this stuff so you can see it better. Let me throw on the EMA fill. Yes, it's still red. Let me take off price. That is still red. Therefore, I am still midterm time frame bearish because cross bad, period. There have been times in the past where this crossed to the down, this crossed red, right? The 5-day chart, the 21 EMA going below the 55. It historically means that's the second half of the bear market. And in those, there are like the majority, all but one, all besides 2013, price did come above and close several candles above before then going back down right before this flipped, right before it flipped. That's why I'm still midterm time frame bearish right now, right? And I've been maintaining that on my channel for quite some time after I made the cross bad type of videos, right? Cross bad, it's still, and it's like that on the weekly as well, with the red line going below the yellow line, which is the weekly 10 below the weekly 21. It roughly aligns with the 5-day chart, what I'm doing here. It's almost the same thing, but I like to have you all, and myself, really helps me to visualize it with an EMA fill. So therefore, there is still a decent chance that this is a rally. It's obviously a rally. There's a chance it's a rally, Tim. That makes a lot of sense. There's a chance that this rally is going to have a very clear end and it's going to go straight back down. There's still a statistically strong chance of that happening. I need you to know this. I need you to know this. There's still a strong chance. Now, I've been mentioning on my channel, there is one thing that can happen with this sucker still being red, where I will take, let's say this is bearish. This means bearish, this means bullish, right? The arrow, right? And this means neutral. There is one thing that could happen in the charts where if this is still red, I would have to flip to neutral. And that's if, and it has to do with the very first thing I covered here, the monthly close, or why am I doing 3? Oh, it's in 3 days. That's why. Okay, my subconscious was controlling my left hand here. This is a great video, Tim. Yeah, in 3 days, the monthly closure, closing above that monthly 10, even if this sucker is still red, okay, that sucker's still red. Let's throw on the monthly 10. If price can close over that white line, as April 1st begins and the month of March closes above it, while this is red, I have to be midterm time frame neutral. It would be silly of me to have 2 green months, one closing above the 10 EMA for the first time in a long time. I just couldn't remain full on bearish. So therefore, I would probably trade way more hesitantly, and I would trade more in and out quick. I wouldn't be looking for longer moves if I were trading, and that's the type of stuff I would communicate within my Discord community. Again, links to that in the description section of all my videos. And so that's what we got. We have the 52K area, 57 to 50, 55 to 57 area. All right, and 57 to 59. So in short, roughly 52 and 57 are your areas of interest, depending on if you're using horizontal structural analysis or if you're using a tilted range type of structural analysis. 52 and 57 are the key numbers for this rally. If you like this video, go ahead and click this video right here on why 2022 could still turn around and be really ugly. I made this back in November and it's still in play right now. If you want to learn how to set up a chart just like mine with a 28-minute trading view tutorial video, go ahead and click this video right here. You just got Timified Worldwide. Peace.